Another tough day in the markets. Nasdaq Composite down 2%. Tough day today. Tough day. Today, I'm going to talk about, what should we talk about? Doing these daily recordings is not easy, but I do have a lot to say. I do have a lot to share, a lot of tips and insights just based on my daily trading and my past experience with a lot of different trades. So, no sweat. Today, we'll look at a company called IREN Limited. You might know this company. I found out through, I've heard it just around in articles and stuff like that, but I do have a trading group from my Threads account, and this came up a lot in my feeds. And so I thought it would be worthwhile to take a look at it. I love AI companies, and this is an AI first company. In fact, just a little bit background, they're an Aussie company. They used to be a data center for Bitcoin mining. And of course, there was more uh, profits in switching over to being an AI cloud computing company, just like CRWV. And recently, they made a multi-billion dollar deal with Microsoft for the next 5 years. And looking at the charts, it's come down a lot. That's not the point. The point is, I was very tempted yesterday, based on one of my trading buddies on Threads. I call him Trading Buddy because he's made a lot of right calls and we collaborate and we align our thoughts and strategies and we're on the same page. And he tipped me off and said, "Hey, you might want to check this out." And over time, I've learned to trust him. And so it's come down quite a bit. It was at 36.50 cents. Pretty cheap, pretty cheap compared to its all-time high. In fact, not that it matters, but its all-time high was at 76.52. Just did a quick check. 76.52. And it's come down, I guess you could say, uh, by over 50%. And so I love discounts. I love AI companies. AI is changing the world. I'm super gung-ho about putting money into AI companies, especially one that's backed by Microsoft. So I was very tempted to buy it. But then I didn't because I looked at the charts briefly as he told me about how awesome and how he's going starting to accumulate shares and urging me that it probably would be a good idea to start buying now. But uh, looking at the charts, it didn't touch a certain signal, and so I told him that I'm holding off until it touches this signal first. And just out of sheer discipline, I held back and I'm glad I did because that stock came down 36.50 down to about 33, which is getting very close to my buy point. So I'm going to jump in and talk about that. We'll look at the chart, just kind of walk you through uh, basically what I saw, and hopefully this will give you some insight into how I decide on what's a good buy price for a stock. Let's jump in. We're looking at IREN on TradingView, and you can see that the price is sitting right here. It's at 33.78. And the signal, the first thing I noticed was that it hasn't touched the 200 EMA yet. And so without spending time putting all these different signals and indicators, these are all preloaded by the way, I could instantly tell where the price is headed next. And I think that 31.96, $32, by the way, that's the strike price that I started selling puts at because I am okay to start buying shares at $32. So if the price, let's put that up a little bit. If the price falls below and say it comes down to 30 or down to 26, I'm okay buying shares at 32 and on the way down. Now, the other thing I do want to note is you see the blue over the red, which means, right, we're still in an uptrend, generally speaking. All right. It's not always the case, but I would be very worried if the blue was below the red. And you can see that it's kind of slanted down, which is not good, but it's still, there's a lot of vertical spacing between the blue and the red. So it's going to take a while for that to cross over below the red, if it does at all. All right, so that's point number two. And you you can see that there's this sort of, it looks like a intestinal tract, right? It's all in blue, and there is a upper, and then there's a lower, and then there's a middle. This is what is called a Bollinger Band. And this is something that I keep on my charts as well, right? And I like to think of it as a rubber band, right? So if the price is at the lower band, that generally means it's getting more and more oversold. And if it's uh, above the upper band, it means it's overbought. And generally, in the middle band is the 20 SMA, right? The 20 SMA is in green right now. It's 43.90. So generally what happens if the price is uh too far stretched out like a rubber band, it will snap back to the middle, and that's what's called mean regression. So eventually price likes to snap back to the middle, and when that exactly happens, we don't know, but eventually it does happen. So we are currently right now at 33.78, and the lower band is at 35.20. So we are past the lower band, and hopefully price will mean regress to the middle at about 43.90. If we switch to the weekly, and as you can see, all-time high down to current price. 55.62%. Can it come down more? Of course it can. And if we do our fib retracement from swing low to the swing high, all right, so we're coming down to about 32.71, which is a 0.618. And then we have the 20 EMA at I'm sorry, the 50 EMA at 28.63, right? And if it really, really, if the whole market tanks, right, then the 200 EMA for the weekly is at 13.35. But that's that's much, much later, at least in my personal view. I'm not a financial advisor. You have to do your own research, all right? So you know the drill. And right now, we're touching 32.70. My strike price is at 32, few cents below, and we have support here, and then we have support at 20. So you can say support at 30 and 20. And that's it. That's my quick analysis. I sold puts to start buying in, but at the very least, start building up, start collecting weeklies, and if I do get a sign, then I will own shares at $32. And then the following week, I will continue to sell small position puts so I can buy in at lower and lower prices. My advice, just look at the charts and instead of blind guessing, start planning your lower buy prices. Okay, avoid the temptation of buying now. I know how tempting it is, especially when the market's already come down a lot, right? It's already come down from there to there, like over 55%. And so getting a 55% discount, something on sale that is a good stock, then it's very tempting, but it can come down more. Okay. As they say, don't catch falling knives. And so know you're safer, lower buy prices, and start doing small positions, adding little by little, especially in these markets where the markets are all pulling back. And especially this week that I had talked about, we have triple witching, we have CapEx, we have the carry trade risk with the Japanese yen. So there's a lot of things going on. Time to be extra careful. I hope today's video helped and gave you a little bit of insight. If it did, please subscribe, continue to watch, and I look forward to seeing you in the next video.